which side of the line somebody is on is because there's a difference in tax. Why do we want a difference in tax? If we had a tax system that didn't give you this different treatment depending on how you're working, you actually would get rid of the need to put those kinds of barriers in place. So I think the answer is we absolutely have to fix these problems. I think for the Conservative Party, in its time in opposition, it needs to pick off among the many long list of these kinds of problems, which are the one or two it thinks of as a top priority. Don't try and do all of them, because the tax system is big and you can't solve it all in one step. But pick one or two of them that are really big, that are really substantive, like how we tax work, or like how we tax investment, or the treatment of expenditure, the VAT system that I described. Pick one or two of those and really focus on how are you going to reform. Is it going to be by equalising tax across work? Is it going to be that stop having a privilege so that you have a lower tax rate as a landlord than you do as an investor in a private business? Is it going to be trying to solve the way in which different people work? Pick one, pick two, and really focus on that as a direction of travel. And I think everyone, I guess, on this panel is going to agree that this is the kind of thing that you need to do that would support growth. And actually, when you do those things, you can then decide, do you want to raise revenue from that? Do you want to make it revenue neutral? Do you want to cut? That's a separate question. We can all argue about what the right size of the state is, as we said at the top. But those questions really should be separated from how do we structure the tax system.
Dan, you've done some work on this, haven't you?
Yeah. So I think it's worth just kind of just briefly laying out, the two kind of slightly separate issues when we think about the tax system, which is on one hand, there's the overall level of tax. How much tax should we take out of the economy, which it has been going up over time. And that's more of a political question and one where kind of Conservatives and Labour would disagree, and it sort of reflects your views on the size of the state. And that has economic implications, and I would probably argue for a smaller state. Other people might argue for like a slightly larger state. But the second area, and one where Aaron and I have a huge amount of agreement, is the way we raise taxes can affect economic growth, economic decision making, and how people go about living their lives. And so Centax and us are just doing some work trying to bring together a coalition of kind of centre-left and centre-right forces to say, actually, there's so much stuff we agree on with how crazy this tax system is, and we all agree that 20,000 pages is too much. We can reduce that. We all agree that taxes on, say, transactions for housing is crazy. It doesn't help anyone. We should get rid of bad taxes like that. The question is, of course, like if everyone agrees that it's kind of crap, why hasn't anything been done about it? And I've sort of listed 5 reasons. So I think there's like just a political reality that tax reform has winners and losers. And so if there's a lack of economic growth, it means that it will be like a zero-sum reform. It'll be taking from some people to give to other people. And if there is lots of economic growth, meaning that you could kind of avoid losers, people sort of lose interest because there isn't really any immediate need to do it. So I think that's one reason. I think a second reason why it doesn't happen is a kind of lack of intellectual interest or knowledge on behalf of politicians to actually want to make changes. So I very rarely hear from a politician a coherent economic argument for how the tax system is hampering growth in a holistic way. Not just kind of bits and pieces here and there, but talk about big picture, holistic things. The third area, I think, is a love of gimmicks. And I might be slightly controversial, but I do think that the kind of national insurance announcement yesterday is another gimmick, really. Like it's a deferred tax cut for a particular type of worker. And how is that going to work? Are we going to set up like another savings vehicle? It's going to add pages to the tax system. And it's not really going to solve any of the big issues. What we should be saying, in my view, as a Conservative Party, is how do we move towards a single income tax rather than have this crazy system where national insurance taxes work and other people who have different types of income get taxed less. Fourthly, lack of courage around tax reform. All big changes require political courage. So that's important. And I think a lack of political strategy. I think I agree, maybe disagree slightly with Aaron that, our approach to tax reform has often been quite piecemeal, and the way we talk about it is, will we raise this thing here or will we tweak this thing here? Actually, packages of reform, which is to say, broad-based. We're going to cut income tax on one hand. For example, a package might be, we're going to cut income tax on one hand, we're going to broaden the VAT base on the other hand. Overall, most people come out of that fairly neutral. There'll be some winners and losers. But advancing packages mean that people out there can kind of see the coherence of what you're trying to do, rather than say, oh, why is this particular thing going up and this thing isn't? So making kind of broad changes all at once means that I think it's easier then to make the economic case for what you're trying to do.
So Harriet, you've been there, done that, worn the T-shirt. What's the biggest barrier to getting things done?
Well, see, I love the way that you framed this question, because you listed things like home buying, work, investment, which I think everyone in this room would agree are good things. And there's also a long list of things in our tax system that attract taxation, which are seen to be, quite harmful. Pollution, things like sugar and so on. And I think strategically, there is a huge interest in your work and how one might be able to move the tax system so that the good things that you listed attract less taxation, and the harmful things attract more taxation. I think that would be a good strategic way to think about the overall ways in which we'd like to see the tax system change, because not only is the tax system far too long, it's also far too complicated. And one of the things when I was chairing the Treasury Select Committee we got very annoyed at the government about was that they abolished something called the Office for Tax Simplification, which did at least have the remit and the mandate to try and find ways in which to simplify the tax system. So the tax system is not only too long, the tax system not only focuses far too much on things actually you want to happen, things you want to incentivise, and doesn't tax sufficiently some of the harmful things that we can identify, but also it has a whole series of cliff edges and disincentives that can really create the behavioural changes that you would not want to see. So people who don't want to grow their businesses because it would take them over a certain threshold, people who don't want to take a promotion because it would take them into a bracket where they would actually experience an enormous marginal tax rate. I think we discovered when we did a report on this in the Treasury Committee that if you are fortunate enough to be offered a promotion between 100 and 110,000, your margin, and you have children and they've been using the tax break in terms of help with childcare, tax-free childcare, you would actually experience a marginal tax rate that would be greater than 100%. So that's a very strange disincentive that you're sending through the tax system. Yeah, a pay cut to someone who gets a promotion and a pay rise. And throughout the work that we did on tax reliefs, the work that we did on tax simplification, and the work that we did on cliff edges and disincentives, we're sending messages to small businesses and messages to individuals to make decisions that are perfectly rational for them, but are actually going counter to the kind of growth that you would want to see overall in the economy. So I hope that we can agree on this panel and in the room today that a strategic direction of travel away from taxing good things and more towards taxing harmful things, and to try and avoid some of these cliff edges and disincentives that act to shift behaviour in the wrong direction would all be positives.
Aaron, of course, we can all wax lyrical about the benefits of reducing, 20,000 more towards, the 350 or an aspiration in Hong Kong, but it often butts up against reality. We've seen it. George Osborne, the pasty tax, when he tried to simplify that. Philip Hammond, when he tried to simplify national insurance contributions. I mean, how realistic is it that we can even get the trajectory downwards towards something like 17,000 pages of tax code?
Yeah, I mean, Daniel set out sort of some of the really big reasons that the sort of things that get in the way. I mean, I think one thing, I completely agree with Harriet's point that the huge cliff edge at £100,000. That if you have young children, you're basically worse off if you're in London, you're worse off with two young kids to get to about 140. That's crazy. But what is the thing that gets in the way of the Treasury doing it? One is it will cost a bit of money, and that is something you have to find, but it's worth it for the impact it would have. The other is, I think, that both parties, the Conservatives as well, were scared of having a distributional chart that says, here's a giveaway to relatively well-off people.
Absolutely.
But it is a real cost to everybody that we are having people who are smart, who are doing well, who are earning high incomes, and could be earning even higher incomes and paying even more tax revenue, holding themselves, reducing their hours or not taking that promotion that would be more stressful because that keeps them below this 100K threshold, throughout their 30s basically, until their kids are old enough that they're not affected by it. But I think people are scared of that distributional chart. I think, to your question, Sue, if you're thinking about how do we reduce the scale of that tax, like that long set of tax legislation, a lot of the barriers that are in there come from the fact that we make all of these structural choices to have lots of different rates around the place and then have to police all those choices. And it's that policing of the choices that lead us to have to define what exactly is this and what exactly is that so that we can tax these things differently. If we take that strategic vision, these packages of reforms like around work or around property, and say, this is what the principle is, this is what we're trying to achieve, you can then say, okay, because these things are taxed in the same rate, we don't need to work out if you're employed or self-employed. We don't need to work out what exactly kind of VAT product, what kind of product this food is. Is it a flapjack or is it a muesli bar? Because ultimately it's taxed in the same way, so we don't care. We don't need to know. And I think that sense of having a clear sense of direction, knowing this is what we're trying to achieve, that doesn't necessarily mean overnight you have to go and say we're whacking the same VAT rate on everything all at once. It can be saying, look, the principle is we're going to equalise these things. That can include, it should include reducing the VAT rate on other products, but can say we're going to do this, we're going to do it over 5 years, and so these rates are going to go up slowly, and we're going to hit equalisation by the end of a parliament or something, and that gets you there slowly so that it's not a big shock to everybody all at once. It's not going to have the same impact on inflation all at once. There are these transitional costs, right? There's transitional costs you do have to, as a government, if you're making these kinds of reforms, think about and work out how do you want to protect people, who do you want to protect, because there will be costs, there will be losers, but you do have to do that and then decide which are the ones that are the priority and why are they the priority and make the kind of political case for why this is worth doing because the prize is large enough.
So, for example, would you be in favour of raising or adding VAT on children's clothes and food?
But the way to think about it is not, well, we're going to pick this thing. That's the passy tax problem. The passy tax problem was saying, okay, well, it's a bit weird that hot food out is taxed differently to hot food in. Why are we doing this? Like pasties eaten in Greggs should be the same as pasties that you walk out the shop with. But that kind of micro thing doesn't really raise any money, sort of ties up one little boundary somewhere in the tax system, but leaves all these other boundaries that are still there. And that's not the way to think about it. The way to think about it is to say, look, everything, all the sales, they're all going to be taxed in the same way. That's what we're going for. And in exchange for that, the prize is we're going to be able to reduce the rate. We're going to be able to, because we'll raise a lot of money from doing that, reduce the rate, support the households that will be worst hit by that through changes to universal credit or whatever you want to do to protect those low-income households, because there will be a big cost, But we also know that low-income households spend a lot less money on children's clothes than high-income households. So most of the revenue you get from that kind of reform comes from high-income households. And I don't want to encourage high-income households to buy more children's clothes versus adult clothes. Right? That's not a thing I want to do. But that's what we're doing now. So I want to not have that gap there. And I also don't want to encourage lawyers to spend time trying to work out, well, is this actually clothes for a large child or is this clothes for a small adult? Because actually it turns out that they can overlap in size. But that means that if it's sold as children's clothing, it's much cheaper. That's not a useful use of anyone's time.
Daniel, a similar question, but on a much bigger scale. You said you're not a fan of gimmicks. You aren't a fan of Mel Stride's national insurance proposal, but it is very eye-catching. I mean, you said you're a fan of a flat tax, for example. If they, got rid of national insurance and rolled it all into income tax and made it into a flat tax, that would hit a lot of pensioners, it would hit a lot of landlords. And as Mel Stride always tells me every time I see him, the average age of a Conservative voter is 63 years old. How do you sell that to the electorate?
Yeah, I'm not trying to get elected, so thankfully. I mean, I think, what I would do if I was, I would basically do what you've said, which is just extend the base of VAT and use all the receipts from that to cut a load of taxes, national insurance, abolish stamp duty. So that's what I would try and do, so that you're kind of shifting the tax base from income to consumption, which most economists would say, I think all economists would say, that's a much better way to raise tax. It's much less economically damaging. I think the politics of it Yeah, challenging. I mean, if you did the national insurance thing and you hit pensioners, you have to find a way of either compensating them for that somehow, or just saying, look, sorry, you're going to have to suck this up. I guess it's a challenge of our pension system, is that they've already paid tax on. They haven't paid tax on their contributions, and then later they're paying a higher tax rate. So that would be a challenge. I think the way you would have to try and do it is compensate them. Maybe you would give them an uplift in the state pension or something like that. I think landlords, I'm not sure how you would solve that. But I think there are going to be losers, right? And you have to make the case that actually, in the long run, we'll all be winners from this. In the short run, there'll be some losers. And this is for the good of the country. I think that has to be like the answer to some of this stuff.
It's interesting that pensioners are now being spoken about, because one of the things that's going to happen during the life of this Parliament is that with the triple lock, the basic state pension is actually going to start exceeding the personal allowance, and particularly if the Chancellor then freezes the personal allowance for a further 2 years, you're going to suddenly have a lot of pensioners who are drawn into paying income tax on their state pension, which is the only income that they have. And I think that is going to be an extremely challenging political situation, not helped by the fact that, as we've seen already, HMRC struggle to cope with giving taxpayers an acceptable level of service on their helpline. They wanted to actually close down the helpline for the first, 4 months of the year, and the Treasury Select Committee, we just kicked off about that so loudly that they had to reverse it. And so that, I think, is a really big political challenge coming down the line that's going to be a big worry. And I think that one of the things that we announced yesterday in terms of HMRC was a system for businesses to be able to rate HMRC in the way that you can rate a restaurant that you use. You know, how was your experience using HMRC? And it is, we find, we do regular accountability sessions with HMRC. But we do find that there's always room for significant improvement in terms of the taxman's service to the tax-paying members of the public. And I do really, really worry about what will happen when the state pension exceeds the amount of the personal allowance threshold.
So, Harriet, can I just pick you up on a point you made in your opening remarks in the sort of the principle of, you know, taxing things that are bad and trying to give tax cuts for things that are good? Who decides what's good and bad? For example, oil and gas, you know, oil and gas energy helps to keep the lights on, is good for long-run productivity, but people say, you know, it might contribute to global warming, etc. Who gets to be the arbiter of what's good and what's bad?
Well, I guess ultimately it's going to be the Chancellor of the day, isn't it? But, you know, I think there was some pushback from a range of different actors when the sugar tax was announced, but I don't think you would find very many people who would want to make the argument that, you know, sugar was something that was really good for you. So I think it's something that's enabled an incentive to be given to that industry to reduce the amount of sugar in some of the sugary drinks that were available, and it also, you know, raised money that was able to be provided to the NHS. So I would give that as an example of a new tax that was brought in that sort of fitted into that strategic framework.
I mean, sorry, can I think, I don't know, but I think there is a fundamental problem with what you're saying, is that, number one, is there's just not enough bad things to tax to raise enough money for everything, right?
I'm not saying you could abolish all the taxes on.
But secondly, the policy objectives of that are different, right? Like, you're trying, if the policy objective of that kind of like a sin tax is to reduce the behaviour of something, it's not to raise revenue, really. And so the ultimate success of a tax on something like sugar would be it raising zero, because no one's eating any sugar. So I think when we say you should tax bad things more, firstly, I think you just have to be realistic about how much you're going to raise. And secondly, you have to be realistic about the policy objectives, which is actually to reduce the activity, and therefore raising less from it might actually be a sign of success. Broadly speaking, the the tax system overall, the objective of it is to raise revenue for the government to spend on things we care about. And the only real big sources of that are income tax, consumption, or really those two, I think, and maybe corporations. And property tax is another area you can look at.
Yeah, I mean, talking of the Chancellor of the day, Rachel Reeves, it seems like she's got a multi-billion hole in public finances, and it also looks like she doesn't have the stomach to cut public spending. Can she raise taxes in November without serious damage to the economy?
I think she could. Oh, do you want to go first?
Go for it.
I think she could if she raised. I think she has to break her manifesto pledge basically to do that without.
How would you do it?
I think. Well, what would you do?
There are actually, I mean, to start with, I mean, we don't actually know at this point what the size of this hole is supposed to be. There are a set of things that you could definitely do at this point. I mean, the sort of joy of our dysfunctional tax system is there are so many problems with it. There are things you could do that would be fixes that would make the tax system better and would actually raise money. And as we said earlier, you don't have to use that to raise money because you want to to sort of increase the total tax take. But if you're Rachel Reeves and your view is that you want to not cut spending, not do anything on that side, and therefore you need to raise money, you can definitely fix some of the problems. So we've already talked about the fact that landlords are taxed at a lower rate because they don't pay national insurance contributions. They don't have an equivalent of corporate tax. So they're taxed at a lower rate than somebody investing in a business. If I buy some shares and I'm paying corporation taxes being paid first by the company and then I'm getting dividends, that's being taxed at a higher rate than if I'm a landlord. Is that what we want? Is that the kind of investment we most want to encourage? It's already the case that if I work as a partner in a law firm, I'm being taxed at a lower rate because there's no equivalent of employer national insurance contributions. I'm taxed at a lower rate than the solicitor, who is not yet a partner, or the cleaner, who's not going to be making partner either. So are those the things that we want to encourage? Is that a sensible way to design a tax system? Do we want to encourage companies that can invest more easily to convert themselves into partnerships, because that's a lower, kind of a lower taxed form for the employees, or for the partners of the structure? Closing some of those gaps actually does raise you a fair bit of money. If you fix capital gains tax, broaden the national insurance contribution base so that you're effectively taxing all things equally, you're already getting towards sort of 20 billion just on those. That, if you do nix on all of the things, you are getting towards sort of 20, or a bit more than 20 billion. So once you get to that kind of number, obviously we don't know what the size of the hole is, but you can do those things, and those are ones that I think we would think are sensible reforms. So you could also say, as a Conservative, if you were a Conservative government currently, we want to do those things anyway, but we want to cut the size of the state. So I'm not taking a view on the size of the state. But those are reforms that you want to do because they're moving incentives in the right direction, so that you're not encouraging people to work in silly ways. You're not encouraging people to invest in a specific asset class rather than another asset class. We're not saying you should discourage investing in houses. Just why actively encourage it over investing in a business?
But would you also, if I may, just change some of the mistakes that were clearly made in last year's budget? So, for example, the introduction of taxes on family businesses, I think there's been some good analysis that suggests that that's going to end up costing the economy and costing the Chancellor because of the disincentive it sends to people to invest in their businesses. And secondly, the change that was made in terms of the inheritance tax for non-domiciled individuals on their worldwide assets has caused a lot of non-domiciled individuals to leave the UK and stop being taxpayers here altogether. So would you also recommend reversing some of those changes that seem to have had a negative impact on revenues? So
on the first one, on sort of the tax, the sort of family farm tax and the tax on businesses, we've actually had a report out on this over the summer, which has been welcomed by the NFU, been welcomed by Family Business UK, saying, look, those organisations themselves have recognised the government isn't going to reverse its view that it wants to raise money from inheritance tax somehow relating to these reliefs. But actually, what's the concern? What are we trying to protect here? The reason those reliefs exist is because it is the case that if you are a small family farm, for example, and as somebody running this farm, 90% of your assets are in the farm, you have a bit of savings, a bit of other stuff, but basically this is what you own, then when you die and you want to pass that on to your kids, there is nothing to pay the inheritance tax bill with. 90%, 95% of your estate is just this farm, and you can't sell off one little field because the farm is, it all works together, or it doesn't work at all. So those are the people you might want to be protecting. But actually, most of the relief at the moment, the way that this reform has been designed, is actually going to estates where, yes, they have some farm business there, but actually it makes up 10, 20%, 30% of the estate. There's lots of assets that are nothing to do with the farm. in that case, why are we giving relief to those people? So a better design, a kind of adjustment to this regime that has been announced, is to say, actually, we're going to take away relief from estates where they have these kinds of assets. Those assets make up less than 60% of the estate. Because if it makes up less than 60% of the estate, you can always pay the bill out of the other stuff. And again, I'm not going to get into whether inheritance tax is a good idea, whether 40% is the right rate. Like, given we're in that world, these people can still pay the bill and they're not at any risk of breakup. And if you do that, you can take the people who are above that threshold and raise the £1 million allowance they've been given to £5 million. And suddenly it's no longer the small family farms who can be at any risk of breakup, or the small businesses. So I think that's a sensible kind of direction of reform. That's something that the NFU have been sort of very supportive of, and think, we've done the analysis on it, but they think it would be a sensible direction that would protect farm businesses in the UK. On the non-dom point, I mean, I should say Jeremy Hunt was the one who introduced the reform to inheritance tax for non-doms, and then Rachel Reeves tightened it further to say that trusts for these individuals would also be brought in. But Jeremy introduced the kind of reform that brought in worldwide assets of non-doms into inheritance tax. I don't think that the movement that's happening at the moment, to the extent that people are leaving at the moment, I don't think it's based mostly on that reform. I think capital gains has been important, right? One reason you can see that is that when you look at analysis by people like Bloomberg and they look at people who are leaving, they see that there's as much emigration of people who were UK-born, UK-domiciled, and they're not affected by these changes. And so that suggests that any movements that are happening don't seem to look like that. But honestly, we don't have great data. At this point, we don't really know how many people are leaving. You should expect that some people would leave. Obviously, some people would. When you look at the 2017 reform announced in 2015 by George Osborne, you can see that some people did leave. It was a 20% roughly increase in tax for the people, 18% increase in tax for the people who were affected by the reform. About 6% of people left. But that meant that everybody else was staying, the other 94% stayed, and they paid 50% more tax. And so that reform raised lots of money because lots of people stayed and paid a lot more tax. Some people left. They tended to be the ones who were paying less tax in the first place. They were the heavily tax optimizing people. And so fiscally, the cost of that was relatively low. So sure, some people will leave. Sure, you will get less revenue from those people, although many of them will retain some UK connection and still pay some UK tax. But the intention would be to get a lot more money from the others. I think that's certainly what the reform originally introduced by the Conservative government last March, and sort of extended by Rachel Reeves, sort of is designed to do. One thing I would say that I think is a sort of mistake in the design, both originally, again by Jeremy Hunt and then by Rachel, well, two things actually, two mistakes. One is that there's a cliff edge where if you've been in the country for 9 years, 364 days, and you get hit by a bus, no inheritance tax. One day over that, 40% inheritance tax. That's going to make you sit down with your partner at 9 years in and go like, do we really want to stay another year? The tax rate is going to be huge. Now, why don't we step people into it, right? Like, we all agree that somebody who's been in the country for 60 years, there's no reason they should pay a different rate of inheritance tax to everybody else. Again, not getting into the philosophy of whether we should have one, but they shouldn't pay a different tax to everybody else if they've been here 60 years. We also all agree that they arrive and the next day they die, they should not pay inheritance tax. How do we get from here to there? You should smoothly bring them in. 10 years we start having a tax, it's 4%, then it's 8%, then it's 12%, and eventually it gets to 40 if they've been here long enough. So that's the first thing. Second thing, the tax break that these individuals, when they come to the UK, get is for investment, as long as that investment is in any country in the world except the UK. Why, as UK PLC, do we want to encourage people to come here, wealthy people to come here and say, come here, live here, but please invest in any country in the world except here. If you invest here, we will tax you, and if you invest anywhere else, we won't tax you. That was something that was left that was what was part of the original non-dom regime. It was left in place by Jeremy Hunt. It was left in place by Rachel Reeves. And if we're serious about growth, those are the sorts of things we should be tackling, right? Like, any government that's serious about growth should be saying to wealthy people, to the extent we want you to come, and there's questions about migration as well, but to the extent we want you to come and to bring that wealth and invest it in this country, because that's what the value of that wealth is to us.
Daniel, I want to bring it back to your point about simplicity, because if you choose to raise tax, and let's be clear, other options are available, but if you choose to raise tax, is it better to do something like income tax, for example? It's very hard to escape income tax. You go to a job, you get a pay slip at the end of the month, you've got less money at the end of the month. Or is it better to do wholesale reform of something like capital gains tax, where obviously people are very sensitive to that. They can choose not to sell, and revenues are far from guaranteed. Which road would you go down?
Yeah, I think, there are some fixes that we would agree on for capital gains tax, about allowing for a normal, like inflation and a normal rate of return and things. But I think even with all of that, and even if you raised it, I think capital gains would be quite a limited relatively, in the scheme of how much government raises, still relatively small. So I think, and for the reasons you say, whenever you I think taxing capital is more economically damaging than taxing income in general. That would be my view. So I would focus on, if I had to raise taxes, it would be either income or VAT, because those are least damaging. And the reason they're least damaging is because they affect choices less than other taxes, right? So people will probably still go to work if they're paying a 25% tax rate versus a 20% tax rate. Now, it does have some impact on behaviour, but the impact on behaviour is less than if you're trying to raise the same amount of money from something like, say, capital gains or a wealth tax, I think. So, so yeah, those taxes have less impact on behaviour.
Harry, are there any taxes that you guys raised or any reforms that were, left in the to-do tray? Are there any regrets that you have from your time in office in terms of tax policy that I wish I hadn't done that because, with hindsight, the damage that it did, or something that you didn't do?
Well, there was one change that was made which, if you recall, affected the way in which stamp duty acted in different slices. And do you remember it was like a step, and then you suddenly got into the higher one. If you paid £1 over that, you suddenly attracted the whole rate. And then that was changed so that it was more graduated in the way that the income tax rate is graduated. So you paid the extra on the step. That got funded by putting up the top rate on the highest properties. So, I think all the evidence suggests that and the evidence that we've taken in the Treasury Committee suggests that, stamp duty is one of the most unhelpful. Although we made that tweak, which I think made it slightly less ghastly, it's one of the least helpful things for mobility, for people getting on the housing ladder. And I think if you were to ask me to choose one thing, if you wanted to set out your strategy of how this would improve, it would be probably that one, because I think home ownership and mobility have got to be such core components of a strong and growing economy.
How damaging are marginal tax rates in the economy? And just to be clear, this is the tax that you face on every extra pound that you earn, and the incentives that gives or doesn't give. I mean, how damaging are those compared to sort of, a 45p top rate of tax, for example? And what's the most sort of egregious example that you guys have come across?
I think we've talked about the most egregious one, which is the childcare one. So people think of the top rate of tax as 45%, but there is a standard top tax rate of 60% that happens between 100k and 100, exactly. That comes from the fact that the personal allowance is withdrawn at the point that you get above 100k. Then it gets even worse once you add the interaction with childcare on top. So you end up with tax rates, as you say, you're paying to work at that point. For every extra bit of work you do, you get paid more money in principle, but you pay more, you lose so much in tax that you're actually worse off. That is, obviously damaging. Nobody wants to have a higher income that's going to make you worse off at the end. So those kinds of things are obviously bad. And so I think we can argue about exactly what is the sort of top of the Laffer curve or whatever, but nobody thinks it's that kind of number. And fixing those kinds of problems, really should be front and centre of things that we're trying to do, because it damages work incentives, and it damages work incentives actually for really productive people. They're often at relatively high points of the income distribution. Even at between 60 and 80,000 pounds, there's a withdrawal of child benefit. Again, sort of question of what's the point of child benefit? If the point is people who have children have additional costs, and the state says it has some kind of responsibility to some extent, like we can argue if that's what we think we should believe in, but if that's what we believe, that the state should be contributing something towards that to help people with those additional costs, then those additional costs are costs that everybody with children faces. Is it right to be taking those away in the way that we are at that rate, where you're actually creating, again, another effectively higher marginal rate in that band for people with young children? There are different ways to solve these problems, and I think we can all argue about what's the optimal way, what's the perfect way of doing it. But I think we all agree that these high rates, and again, you see them actually at the bottom of the distribution as well. I mean, universal credit has a taper that at least is kind of constant. But because there are these other reliefs that have, other benefits that haven't been removed, the interaction between some of those actually means you can still end up with quite high tax rates. And when you end up with tax rates above 70%, above 80% sometimes, they're clearly going to have disincentive effects. And some people will still choose to go through that and will still continue to work. But some people will say this is not sort of almost not worth it.
Yeah, you made a point yesterday at the bar, because this is what we talk about at the bar, about sort of this could be throwing up problems for the future, right? If people are shoving more money into their pension pots, for example, to avoid that £100,000 trap.
So the point was that, you know, I think the short-term problem that actually is quite discussed in this sort of space is people who get to 100K, what they'll do is, you know, maybe they won't take a promotion, but probably what they'll do is say, I'll take the promotion and I'll put all the extra money just into a pension for now, so I stay below £100,000 in the kind of income that counts as taxable for this purpose, and that means that I won't lose my child benefit. But if I'm putting £30,000 a year away in my pension at the age of 30, and I'm doing that for 7 years from when my youngest child is starting to be eligible for this stuff till my oldest child gets out of that range, then 7 or 8 years of putting away £30,000 in my 30s, you get to your 60s and suddenly discover you have a much bigger pension pot than you sort of intended or expected. And say, actually, do I really want to keep working? I've got all this money built up. Maybe I want to retire a bit earlier. And you've got these really good, productive people. And there's not a problem, you know, it's not a problem we have to deal, any government deals with today. But we get to 2050 and we start seeing people who are in their 60s, who could be working for longer, are really productive, are doing really great things, saying, I could just check out and go and, you know, travel the world. And it's nice of them to want to do that. But we don't want the tax system to be encouraging them actively to do that because we forced them, basically, to put money away as the only way in which they still had access to childcare.
Dame Harriet, I remember when my first interview with you, you pointed out marginal tax rates as one of the sort of most damaging examples. Do you think the government should focus on tackling some of those cliff edges first, more than other parts of the tax system?
Well, above all, I would like them to, and touched on it, focus on those incentives around moving off welfare. So I think, you know, that making work pay element is so important, that we've got too many people in this country who are finding that they are actually better off than on benefits than they would be if they were to take a job. And we tried to do so much with the marginal tax rate around universal credit, the marginal withdrawal rate, but the things, you know, certainly post the pandemic have got back into the system that I really do think need to be focused on. So I'm hoping that the new DWP secretary will be really looking at that, and with that lens of what are the behavioural incentives that are being sent to people through the welfare system. And the tax system is then another extension of that, where we all ought to agree that we don't want a tax system that's actively sending disincentives to people to invest more in their business. We haven't talked about the VAT threshold yet, and disincentivizing people to earn more. I mean, surely we've got to all agree that there's got to be a marginal incentive to everyone to do that additional work and make themselves prosperous.
Daniel, VAT threshold, up, down, smoothed?
This is not, I mean, there's a healthy debate within the CPS about what the VAT threshold should be. I mean, personally, and not a CPS view, I would lower it because I think it's one of the highest in the world. But I would accompany that with a simplification of VAT, maybe lowering the rate and trying to lower other taxes on small businesses. So I probably wouldn't just do it on its own. I would try and accompany it with other changes, because I think the problem with raising it, I'm sympathetic to the view of raising it, but then you do just push up the problem of people kind of only going up to that amount, and then you're losing a lot of revenue, and then you're treating different businesses differently, like slightly different businesses of slightly different sizes quite differently. So I would lower it, but I'd do it in a
What would you lower it to?
It's small, quite small, probably like 20,000 or something. Yeah, I think that's probably like in the OECD. I think that's about the average. I think maybe it's like 30 or 40,000. Yeah. I think you want it to be. You want to avoid, you know, like if someone has got a lemonade stand on the side of the road, you know, a kid, you don't want them to be paying VAT, obviously, but you also don't want. You almost want to make it so that most businesses where people are kind of working full-time in that business, they're paying VAT, I think.
I think it's really important basically to separate out and think, why do we have this here? Is this here because we want a kind of structural relief? We really think it's important that there's a certain amount of turnover we want you to have before you're in the tax system? Or is it here because, you know, it's administratively a pain, and as you say, you know, we don't want every kid with a lemonade stand or, you know, someone who's making, you know, occasionally knitting a jumper and selling on Etsy. We don't want to bring those people in, right? Like that's not the point. But somebody who is like full-time trying to run a business, we're not trying to take them out of that. I mean, we can definitely try and fix the simplification. I agree, like the filing of this stuff is awful. But the goal isn't to try and make sure that those people are somehow not part of the system. And so I agree. If you raise that threshold, all you do is instead of having people try to do all the things they can do right now to keep their business just below 85,000, you have them to keep just below 95, you keep them, whatever the threshold you set. If it's high enough, people will want to work just up to that and then not want the pain and hassle that comes from going into it. And if you're only going to get just into it, it's just not worth it. If you're going to be way past it, no one who's, would be at £1 million is going to worry about this. But it's the people who are, if you set it at 95 and someone's going to be at 100, do you really want to be brought into VAT just to have another £5,000? That's then mostly going to be taxable? No. But if you bring it down to 20,000, well, actually, I'm going to be way past that point. I'm running a business that's actually meant to be a business. If I'm past that anyway, I should just work out how to get into the system and agree the system should be simpler. But at that point, there isn't a cap on, I don't want to grow a little bit more because I get this big fixed cost that comes to me as a result of this. And that, again, what does that mean for the lives of most of you here who aren't probably in the VAT system because you don't run a business? If you're not, or you don't run a small business, what it means for your lives is that instead of when you have a plumber coming to try and fix something in your house, and they're all self-employed individually because the self-employment system encourages them to do that, and the VAT system encourages them to get you to pay for the materials because they don't want to buy it, even though they know what the material is that they actually need to have, because that will put it on their books, and they don't want to work in March because they're actually close to the threshold this year. Suddenly, actually, these basic things work. We have a functioning market economy in which you can actually get access to services because people aren't trying to do silly things to get, to work around the tax system. So it has a real cost to all of our lives. And that's what we mean when we talk about growth. We don't mean some big GDP number out there. We just mean actually meaning that on a day-to-day basis, people are making decisions because these are the right decisions to make economically and not thinking, I've got to game my way around some sort of tax system and that's imposing costs on us all.
The goal should be for a plumber or anyone to think about the tax system as little as possible. And if they're thinking about, it is damaging. There was someone in here yesterday at Cafe and who was talking about how she's lowered the number of days to avoid it. And she would not advocate lowering the threshold. So, and I don't want to speak too much for it, but she's thinking about that all the time, right? And people think about this stuff all the time. And it would just be great if you're a small business owner, if you just had a really, as simple as possible, as simple as we can make it, so you think about it as little as possible, and you just run your business, or you do your job, or you whatever. It's just easy. Or you think about moving house, and you don't have to bring into account stamp duty. You just think about, do I want a bigger house? Cool, let's move. It's so complicated, and it means that we're always thinking about this stuff, which is just a waste of everyone's time.
Yeah, I am going to open the floor to... Just a question, does anyone run a business here with turnover less than 90k at the moment?
Yeah, no.
How would you respond if they lowered it to 20,000?
It's exactly what you need to do. The issue that you've got, because my family had a family barber's chain, really successful one, 23 outlets, but he's paying VAT, PAYE and everything on all the staff. So you have all these Turkish barbershops setting up, and every one was being run as an individual little company to stay under the VAT threshold. And I think one of the questions I'd pitch to the panel really from that point of view is, you talk about those marginal rates and the tipping points of them, it's the avoidance there. I'm seeing a massive growth in the shadow economy with cash, particularly amongst builders, plumbers, electricians, because with the pressure on the rates not moving, it's becoming far more. The 52,000 is a barrier. The 40% tax bracket is clearly a barrier. That 62p in the pound, how did that ever get past the Treasury? Honestly, who did the numbers? They should be hanging from a lamppost somewhere, I'm sorry to say. But there is a massive growth in the shadow economy, and that's having a net effect on the tax revenue. So I've really enjoyed this panel, actually. It's one of the best I've been to be honest. Harry knows what the problems are, but you should have fixed them.
Good to see you, Alan.
But that is a massive issue because people are trading under it and taking cash. And you've got to look at the avoidance because taxation is now at such a high level that it's encouraging a change of behaviour, which is fraud.
There are some things, I'm not sure if it's the Tony Blair Institute, that say you could lower the threshold, hand in hand with making tax digital, which is what HMRC have been trying to do for forever, basically. But do you think that will work?
Yeah, make tax digital has some I don't know much about it. Has some problems, I think. But in principle, paying tax should be really easy, but it should be really straightforward. And if you give HMRC fewer things to worry about, like whether a giant marshmallow should be VAT exempt or not, like they can actually concentrate on helping businesses, like being really responsive to just businesses who call up and be like, I need help with paying this, and they can do that. So in making a digital system that's really easy to use. Thank you. I mean, I don't have much to add. I think it was a brilliant contribution.
More questions, please. The lady at the back. Please introduce yourself as well.
I'm Charlotte. I'm a tax lawyer. I was really interested in what Daniel was saying about the packages idea. I'd often thought, well, if you introduce an unpopular rate of tax or simplification that has winners and losers, you would have to sweeten it in some way, or at least pick up some of the most, hard done by. But I hadn't ever thought about doing a package across different taxes. So you mentioned something like changing VAT, but also simplifying income tax so that we had, more people paying national insurance, partners, etc. Do you have any other sort of package ideas? I thought that was really interesting.
Yeah, I mean, I guess I've always been kind of, just to caveat what it is, I guess I've always been struck by people saying, oh, you can't do that much, or you have to go slowly, or whatever. And there are examples of reforms around the world where actually the opposite is true. And I think we're kind of slightly scarred by Liz Truss, and I don't think we should take from that you can't move fast. I think it just take from it you have to be competent. The idea of like moving forward in large packages. I mean, yeah, the idea of a VAT, sort of like you could call it like a tax switch, right? Like, so it's a moving from income to consumption. There's stuff around property tax, I think, would be like another one. So that might be within the property tax system, but you might move, say, abolish council, the current council tax system and stamp duty, and move to like a more just proportional property tax. That would be another good one to do. I mean, personally, what I think I would do what I described, and I would use it just to abolish probably like 80% of kind of taxes that are basically trying to micromanage people's behaviour, and just be like, get on with it. Get on with your lives. We're not here to like try and, we're here to take what we need to run the state, and we're not trying to affect you too much. I think we haven't really talked about corporation tax, but I think one of the things that we talk about in our sort of document that we're trying to put together is making essentially take full expensing and just apply that to all capital expenditure. So just basically meaning that, whatever you spend money on, you get you can fully expense that, rather than at the moment, depending on the category of capital expenditure, the amount you get back for that is different.
Companies should decide what they want to invest in. They should decide how they want to raise the money to do that investment, whether it's debt or equity, and we shouldn't be trying to encourage particular versions of those things as sort of the high-level principle. And then,
so why is machinery more? Why should we encourage people to invest in machinery rather than property? Like, surely a business knows whether they need to build a shed or buy a new piece of equipment.
I mean, I know Harriet wasn't around that far back, but just to have a sense, like, I actually don't know what's the new political barrier. So if you think of your tax switch, that's more on expenses, on expenditure, less on income. Like, that's Geoffrey Howe in 1980, right? 1981.
Yeah.
So what gets in the way? Or capital gains tax, that's Lawson in 88. So what are the big barriers now that weren't there when these people were doing this in the 80s? Like, what's changed that makes it harder politically to make those really big reforms that are kind of structural? I don't know. I don't have a sense. But do you have any sense for what are the big barriers?
Well, you mentioned one of them earlier, and I think it is worth highlighting that the distributional impact of every budget is now published, isn't it? And I don't know when that first happened, but I do remember, when I was a Treasury Minister when George Osborne was Chancellor, that we would really think about what that distributional impact chart would look like, and that that doesn't necessarily mean that we made decisions that were the ones which sent the right behavioural signals through the tax system, because actually I think one of the very big takeaways from today's session has been that throughout the tax system it's littered with some behavioural distortions, both for business owners, the self-employed, and for people on welfare, and for people who are moving up the tax system. So, I think that I've made this point vehemently from the backbenchers and on the Treasury Select Committee that this ought to be the direction of travel, that we try and reset that direction of travel to ensure that we're sending the right behavioural signals for growth through the tax system.
More questions? Goodness me. The gentleman there with the black shirt.
Richard Jones, ICAEW Tax Faculty Coordinator for Birmingham. We're 6 months away now. That gentleman will be in the third tranche. Will making tax digital for landlords and the self-employed with 4 tax returns a year fix the tax system?
Yeah. Do you?
Don't know enough about that one.
Okay. The question for those who've sensibly enough not had to follow all the details of this, is that we're not far from landlords and various other people having to file 4 times a year a tax return, so this is going through the system. So they have to. HMRC's agreed that it's not going to provide its own software that you can file through. So you have to pay for some commercial software. You can choose your commercial provider, but you have to find a commercial provider rather than being able to fill in your own tax return anymore. So find a commercial provider, fill in stuff through their software, hope their software translates it appropriately into HMRC's system so that nothing goes wrong, and then HMRC tells you how much money they owe you. There have certainly been questions that people like the ACAW and others have raised around how effective this is. I think Treasury Select might have, or maybe PAC has raised some questions about whether HMRC is in a position to fully operate this system. Certainly, I don't think that knowledge is out there among the people who will be affected by it, that they will be affected by it, and they need to own that software already and have started testing it out. So I think there's certainly, and it speaks to this point of, if you want the tax system to work. One part we've spoken a lot about is the design of tax policy, but the design of tax administration is also very important, and making sure that people are aware of what's going on, that HMRC is getting out there. I mean, as you say, certainly some of the avoidance behaviours that are going on are people deliberately doing things. There's also a lot of people just don't know sometimes what they're supposed to do. Without getting into any sort of individual people's tax returns, we know about a case recently of a politician who ended up being tripped up over a purchase of a house where, right? And so, but HMRC weren't the people who picked up the problem there. HMRC weren't the ones who helped that person realise that they had made a mistake. It was the fact that newspapers were looking into it that did that. Does that give you confidence that HMRC is picking up the other examples of these cases? Like, presumably there are other people who've done that and may even not know that they're supposed to do it. So I don't know any individual person's circumstances. I don't know whether they did things deliberately or not, but I don't have the sense that if you were trying to pay all your tax correctly, you would be given the right information that would let that happen. And so there are some really big issues around tax administration and how we make sure that taxpayers know what we need them to know so that they can pay the right tax.
I'm just conscious of time, so we do one more sweep of any burning questions.
There's the lady down here.
All right, lady, let's do 3. So the lady there, the gentleman there. Any more? All right, and the lady back there, the brown.
I was just wanting to mention stamp duty and how you feel that has affected the economy, because I feel that it stopped people moving, and I don't think that's good for the economy. And so is it having a negative effect?
And then there's a gentleman there.
I think we can quickly answer that one anyway, which I think we all agree that, yes, stamp duty is bad, it is having a negative effect, and it isn't a good design of a tax.
Why it exists, no one knows. It just continues to live on.
I mean, the reason it exists is it's a very convenient and easy thing to collect, but that was necessary a long time ago when it was hard to implement tax. It's not necessary now.
I think we need to decide what tax is for. Is it to raise revenue or is it to change behaviour? And I think we've got a consensus of opinion there. But also the way we raise tax, because the way that government gives us money through benefits, we've already referred to the childcare giveaways that we have, is different from the way that the government takes money away from us. When it comes to benefits, it's a household that is considered. When it comes to taxation, it's individuals. And where that has a major impact is where you've got single income households. And there's the anathema of you'll have a relatively high earner paying a 40% plus marginal rate, where you'll have 2 relatively modest earners earning basic rate, but effectively have a higher tax threshold and more take-home pay at the end of the day.
And then just finally, there's the lady in the brown.
Thanks very much. just a question really around the beloved IR35, or dare I say, hated IR35. Just a question about that, because I work a lot with the fintech sector, and it is a huge issue. It's gotten to the point where basically the world of contracting is over. The flexibility of the workforce, the ability to scale or to scale up or scale back quickly has been removed, because everyone has to be a full-time employee at significant cost. And for those SMEs starting out, it's something that can actually kill a business. I'd love to hear your thoughts on how IR35 has actually worked.
So I take IR35. IR35, I mean, as we sort of touched on earlier, the reason this thing exists, this IR35 that tries to regulate who's an employee, who's self-employed or contractor effectively, is because there's a tax difference. And because there's a tax difference, HMRC was worried people were on the wrong side of the line. They were being contracted in when they're really employees, and that was basically a way of avoiding tax. But then that gets in the way of businesses that really might want a contractor. And the solution to that is by simplifying the system. And I think this is part of the point, that it's actually not better for people who want to be self-employed, who want to be contractors, having the tax break, but in a way that then means that they can't actually find jobs and they have to be employed because of what that's doing to the industries. And so I think it really speaks to one of the many examples of why structural problems in the tax system actually feed into people's day-to-day lives, and why fixing those things, I agree with the sort of it's bad for the economy, but I like to frame it in what does it do to our experiences day to day? What is it that's changing in your life? And what's changing if you're trying to run a business is you actually can't hire somebody sometimes who you want as a contractor, because it's really hard to be clear to HMRC this is a contractor, and you end up having to force them into a relationship that you don't want. So I think simplify, tax everyone the same in that sense, in terms of for whatever kind of structure of work it is, and you can get rid of things like IR35.
Yeah, it's good. I'll come to that one, but just very briefly, I think it's a good example of how complexity, which is that we have two income taxes, national insurance, breeds more complexity because we now have to govern the boundaries, and the complexity just kind of cascades through the system. Whereas if you start off with simple, principled tax design, you remove the need for all these other pages. I mean, so many of these pages are trying to fix problems that arise from complexity, right? So if you do proper principled reform, you get rid of all the stuff, I think. CPS has done some stuff on household taxation. I agree that it just seems unfair that a household with one earner on 100,000 and a household with two on 50 each pay completely different amounts of tax. So I would, fiscal conditions allowing, I would love to see the government kind of change that and just make it easy for families to choose how they divide up their time and their labour. I think that's a really good point. And then, stamp duty is rubbish. We should get rid of it.
Any final thoughts?
Well, just we all agreed earlier, I think, that if you were going to pick one thing that you wanted to try and go on a journey with, it would be stamp duty. I think in terms of households versus individuals, you want to make sure that the tax system gives you and the welfare system gives you the incentives that we all want, which is to see as many people as possible with as high an employment rate as possible. So you want to try and make sure that you're incentivising that. And ditto, you'll have heard yesterday the Business Secretary announcing the review of IR35, the Shadow Business Secretary announcing a review of IR35 again to address some of the points that have been raised in this discussion.
So the hours flow by quickly. Can we fix the tax system? Not quickly, but a few points to start. Please join me in thanking our panellists.
Thank you so much. Thank you, Harriet.
Oh, no.